Hello, everybody. This is Monday, April 10th, 2023, and this is John Blank, Chief Equity Strategist and Economist at Zacks Investment Research. Today, I want to get through the disclosures that we always do. My views today are those of myself, John Blank, PhD, and they are not necessarily the views of Zacks Investment Research. Okay, so what are we going to do today? Today, we're going to look at what's trending best in computers and technology. Obviously, this is a hot growth sector. This 2023, it's where all the returns have come. But what we need to understand is what's inside the box. What's inside the box of computers and technology? This is the Zacks analysis today. So we have three parts to it. First, we'll go through the computer and technology groups so we can understand what's in the box. And then also we'll separate out things first on book value. If we liquidated these companies right now, which would be making more money and which would be making less money? That's a great metric for how these businesses are doing. So we're going to look at what's trending best first in book value at the high level, then go to enterprise value. It turns out enterprise value, which is the value if you sold the business now not out of liquidation, but just got rid of all the shareholders, not just the equity holders, but the bondholders as well. Then we have another set of smaller industries that show up that are trending higher. So we're going to look at both book value and enterprise value for looking at those trends in value internally in the fundamentals of these computer and technology groups. Next part, we'll do balance sheet metrics. There's a lot of interesting trends and turns in R&D, assets to equity, inventory turnover, and capital expenditure. So just how these businesses are operating, where they're putting their money for R&D, where they're having chip and supply shortages and inventory turns, and of course CapEx, where they're spending their money building up the infrastructure of their businesses. Part three, we'll get into relative valuations of these groups. One thing that's interesting about computers and technology is that there are value groups and there are growth groups, typically known as a growth sector, but their dividend yield will show you that there are actually a lot of value in these groups in certain areas and not a lot in others. Price to sales will show you where people are paying up more for things, and free cash flow to EPS will show us, again, a few sectors that work at the very small level that you would otherwise not pick up. So, like I said, this is what's trending best in computers and technology. We just want to learn more about getting away from such a high level blessing of this whole industry and understanding the pieces a little better. All right, so like I said, we're going to go first through book value and then into enterprise value for all of these groups. Keep this in mind. We got 4 slides here. I'm going to go through 6 of the 7 groups. So what I want to point out here is in our classification sectors, Zacks 131 mezzanine, 132, 133, 34, 35, 36, or 7. We have 7 of these industries. What we'll focus on are these top 6. We won't spend any time today on telco services because it's services, not equipment. And generally speaking, other than computer software, these do have a physical element to this. So these are more physical. This is less physical. Keep this in mind. This is a general statement. Also point out that these are the growth sectors we're going to find out about. Electronic semis, electronics, and miscellaneous technology, those are actually the growth sectors of the 6. These other 3 will show up, relatively speaking. I'm not talking about a very broad statement, but within these other groups, we're going to find out the computer security and software is very strong. And we're going to find out communications network software down here is also very strong. Office equipment is, generally speaking, where your value sector is, as well as down here in telco equipment. Some of these 2 groups are more your value groups. These are your true growth groups, and this is kind of a hybrid. Now, over here, you're going to see all these numbers. I just want to point out within these numbers, you're going to get up to 263. We get 263 industries over here. A lot less number here, probably 60 or 70. These are a big group. This is when you go to the heat map on Zacks, these are the 263 industries. So again, this is our high level sector. These are our 7 mezzanine groups. Here's all our 263 industries. Again, we'll focus on these top 6. Those are the growth sectors. Keep that in mind. All right, book value. So first of all, this is computer office equipment here. I drew the arrow up to office equipment. This is software services here. And down here is the semis, which I put here. And I just want to point out what is clearly trending higher is all of the semis. Number one, I've got the red line here, I've got the red line there, and I got the red line here. So you can see from all across 2022, this lifting up the book value of semis versus software services versus office equipment. Clearly the case that semis are doing much better. Memory, general, and electronic sundries, there's any industry does better over here. I want to point out these are relative ratios. So when an industry is at the top of its relative ratio, it's actually the larger part of this industry. So for example, here we have software services, and the biggest part of that is computer software. Here we have computer networks being the biggest part of office equipment. And down here, we got semiconductors general and semiconductors memory, which are the largest parts of that industry for semis. So the way to think about the differences between the lines from top to bottom is these within the groups, those are the larger ones and those are the smaller ones. Trending higher is what we're looking at today, but the other thing we can look at is what's at the top and what's at the bottom, and just figure out that if it's at the top, that's a bigger group in that industry than the others. Keep that in mind. All right, electronics, miscellaneous tech, and telco equipment. So here is electronics, there is miscellaneous tech, and there is telco equipment. And again, I am noticing electronics is trending higher and miscellaneous tech is trending higher. Now, where do I see this? You can see all those lines going up. They're all going up together. 2022 is very strong for electronics and miscellaneous tech. Relative to telco equipment, look at this. Really not a lot to be said for this whole thing. The largest industry, of course, from a book value perspective, is the wireless equipment providers. But there's all these other groups. They tend to structure themselves and run along in a very stable fashion. Like I said, this is more your value group. You can see that there really was build out in electronics and in test miscellaneous tech. Those are the groups over here now that you want to study. You want to get a hold of these industry groups in your mind, look at them, memorize them, learn them. These are the groups that are going to help you make better decisions on an industry level. Remember, half of a returns in a stock pick are its industry. But that's why we're doing this today, because you're going to get half of your returns right by understanding which groups to play better. All right, enterprise value. I just want to point out down here, a simplified way to understanding the enterprise value concept is to envision purchasing an entire business. If you settle with all of the security holders, you pay the enterprise value. All the security holders means bonds and stocks, people. So let's go through this. Again, here is office equipment, the top. There is software services, and down here is the semis. Now, you got to look a little closer here. But first, I want to point out that this is computer software, and it actually is the largest part of this group, computer software. No, it's no surprise, but it's also trending higher. Computer software actually is a growth business within itself. It's just so big, it's hard to pick up that turn. But here you can see unmistakably from 2021 to 2022, the growth and security. There has been so much hacking and worry. Security, it really is a place to look into. Down here, I just want to point out, this is the semi-generals down over there. They're the largest industry, just they're so big. But you can see that really all of them are pretty much the same. There's very little in a way of underlying trends. The entire group is, from an enterprise value perspective, not showing much. Those two groups I want you to pick up. Security and computer software are trending higher. All right, here I want to point out, this is the electronics, the mis tech, and the equipment. Again, these are my groups where I want the growth. And yes, once again, I'm picking up something. It's electronics parts distribution. That's what you just think about the name, electronics parts distribution. That's going to be your supply chain shortages here. They made money. Electronics part distribution. The other group, communications network software. Obviously strong, right? Getting your communications network software working better is valuable. People will pay up for communications network software. All right, so on we go to the R&D as a percent of sales, assets to equity, inventory turnover, and CapEx. Number one, I want to point out down here, out of all these R&D at percent of sales, I want to see R&D grow as a percent of sales, and where does it grow that's noticeable and distinct. I picked up one, electronic power research. Of course, this is the battery stuff. Electronic power research is making a ton of money. Keep this in mind. They're building out this research because it's hot and there's interesting things going on. Keep in mind electronic power research. Okay, down here, I just want to point out communications network software, which I showed you in it earlier, was a really strong area. It's showing a convergence in R&D as a percent of sales. So after COVID, from an R&D perspective, it's kind of declined, but it was a really hot sector for a long time. So you can see that the actual build of communication network software preceded COVID, unlike the electric power research, which is now picking up. So there's an internal structural change you can pick up in the R&D as percent of sales data. All right, assets to equity. I want to point out, first of all, assets to equity means if you have more equity, you're going to have a lower ratio here. So lower ratios are going to be better in this particular area. On this chart with office equipment, software services, and the semis, I don't see a whole heck of a lot. But on this one, I do see something. Computer test equipment shows a buildup in equity. That's that green line. Look at how it goes from 7 down to 3. They're making money in computer test equipment, and you can pick it up there. It is the largest part of electronics, which we talked about as a growth sector. And within that, computer test equipment is where you want to look for a trade. Excellent information there, people. Computer test equipment. All right, down here, I just want to talk about inventory turnover. A low turnover rate may point to a lot of problems. However, in some instances, a low rate may be appropriate if it occurs in anticipated rising prices and shortages. This is the language I want to pick up on. Lower inventory turnover that's building is showing you where the rising prices and expected market shortage are probably happening. So we've got here computer office equipment, here software services, and here the semis. I did the red arrow showing you exactly how the lower inventory turn across the semis is the key point here. That's your ship supply shortage. It's building along a timeline, and I want to show you that's been building for years. It's not just a COVID event. It's been building for years, folks. We've had this problem with these chips. People are turning to the chip businesses in so many ways for so many different devices out there. All right, inventory turnover for electronics, mid-tech, and telco equipment. Yeah, there's been some buildup down here. But it's really nothing I could pick up that's as distinct as here, where I can see for sure the chip supply shortage. Here, I really don't see much. Obviously, it's compressing a bit, but in general, not as clean a play to understanding something as the semis. Right, CapEx. I just want to point out where I can find something. First of all, down here again in the semis, memory and the general semis are so much of CapEx. You got to keep in mind, memory is a huge CapEx spending business. It's almost the same amount of CapEx it spends on all the other semis combined. So keep in mind, semi-memory is in line with semi-general, where there's a lot of companies in here. That's my main point here on this chart. A lot of other noise here, but keep this bottom difference. You can see how these two industries from a CapEx perspective are so much greater than these other parts of the semis. That's the point here. Down here in the semis, growth sector, and the CapEx is going in those two areas. All right, over here, there is a noticeable build in the charts in CapEx across electronics, mid-tech, and telco services. Again, remember, electronics and mid-tech are our two growth areas. And yes, in 2022, we're seeing the CapEx build. We're also seeing it down here in wireless national. Not sure what that is. We'd have to take a look. But generally speaking, all of these areas are getting a CapEx build. Wireless national is probably one of the networks that will build up, that are building out in the system. Communications network software, as we pointed out, is strong. All right, valuation metrics. Dividend yield is a good way to pick up the value areas of this business. Price to sales ratios show where people are paying up. And free cash flow to sales is going to point out some interesting things. Free cash flow, of course, you don't have as much free cash flow when you're investing a lot. So we're going to learn a few interesting little tidbits in the free cash flow to sales to earnings ratio. But let's get going. Dividend yield. higher dividend yields in computer software show that this is a much more of a value sector. You look at these, they're all up in the 2s to a 10% dividend yield. But in the office equipment, this is your value area. You can see you can get earnings from dividends in the office equipment. That's more of a value than a growth area. Down here, this is your typical 0 to 1 or 2 dividend yields. That's the main point I want to point out here is dividend yields are really an office equipment thing. That's the value area. All right, other possible value areas. Electronic products miscellaneous is actually pretty good. I like semi-fab foundries, which is relatively good here, and wireless equipment is relatively good. Here again, I'm looking at distinct areas within these areas for dividend yield. And again, you can find them, like I said, in products, semi-fab foundries, and wireless equipment. All right, price to sales ratio. Just point out here the semis numbers are much lower than these computer office and software services. Semis trade a lower multiple valuation. That's the main point here. Just point out to yourself that semis generally, when you're looking into this industry, you're going to see lower prices to earnings ratios than these other groups. It's just how the industry trades. Keep in mind, certain groups will always have certain specific factors to understand. Price to sales for semis, just going to be a lower number. All right, over here, I just want to point out test equipment is trending higher. We already talked about this. When a price to sales number is trending higher, it means people are paying up for it, which means people think the growth is there. So again, electronics test equipment is trending higher in its price to sales. People are paying up for electronics test equipment. All right, free cash flow to sales. This is an interesting one. I just want to point out, you're seeing more of this in security and internet software and services, like we talked about earlier. There's your security and software services. That's what you want to see from growth. So again, security and internet software services are doing what you would hope to do here, which is having this ratio rise, which means the free cash flow, the valuations of price to sales are going up. That people are paying up for those. So again, security probably going to have to pay up and pay a higher multiple for security companies in stock terms. All right, free cash flow to sales. I just want to point out fiber optics is tanking. What this is likely showing you is they're eating up their cash flow from a rapid expansion. Fiber optics around the country, particularly in California now, we're building out networks. I see them on the roads all the time. And that means their cash flow is down. Don't take that as a bad turn. They're just in a rapid expansion. All right, thanks for attending. I hope you enjoyed it today. You need to understand this. We'll go through a couple other parts of computers and tech in the next 2 lectures. This just gets us started at the very top down level, looking for the opportunities, understanding value and growth, and how it all fits together. So get a hold of the slides from 866-794-6065. Email us at strategycall@zackspro.com or go to the web and find us at www.zackspro.com. I really hope you enjoyed it today. I enjoyed providing it. Thanks.